Good day. Welcome to another session of Fog Accountancy Tutorials. Today we are going to continue our study of IAS 20, Accounting for Government Grants and the Disclosure of Government Assistance, by looking at the disclosure requirements for government grants and then that for the government assistance. Now, remember that this standard already has the word disclosure in its name. Okay, now it is important that as we continue to learn the International Financial Reporting Standards, we don't ignore the disclosure requirements. Now, what are the disclosure requirements? Now, the disclosure requirements are those information that is expected to be included in the notes to the financial statement regarding the treatment of specific items of accounting. Now, please take note that when it comes to government grant, there are certain things that the financial statement needs to disclose in the notes. And that is basically what I'm going to mention for you. Now, it is important for a preparer of financial statement or for an accountant to be able to understand that these things needs to be explained in the notes so that the users of financial statement or the user groups would be able to have a better understanding of the items that are included in the financial statement. Now, every IFRS has its own disclosure requirement. What we are coming to look briefly is for IAS 20, the disclosure requirement for IAS 20. Now, like I said, it is not only important for those who are preparing the financial statement, but even as students, you should note that you can be examined on any of these disclosure requirements. So having understood that, let us quickly look at the disclosure requirement for IAS 20 as enshrined in the standard. So I'm going to project that onto your screen and we are just going to look at it briefly. This is not going to be a very long video, a very short one, but I realize that it is important that I begin to add the disclosure requirements to those standards that I have treated but not yet included. So let us look at disclosure requirements for IAS 20. So we begin with the disclosure of government grants. Now, the financial statement must disclose the following in relation to IAS 20 government grant. 1. The accounting policy adopted for grants, including method of balance sheet preparation. So what we are trying to say is that when you prepare your financial statement and then you have a grant. Now, if there was no grant received from government, meaning you didn't recognize any grant in your financial statement, there will be no need to disclose this information. Now, this information will be disclosed because there is grant. And when you receive the grant, there are so many accounting policies that you decide to adopt. So whichever accounting policy that you have adopted, you need to disclose in the notes to the account the nature of the accounting policy adopted. Okay, so he says that you disclose the accounting policy adopted for grant, including method of balance sheet preparation. Now, you know that there are two alternative ways that you can even present your balance sheet or statement of financial position. You can either go by the working capital method or you go by the total asset method. Now, whichever method that is deemed fit that you are going with, you need to disclose that in the financial statement as part of the disclosure requirement of IAS 20. So these are the three requirements that we are mentioning. But the first one is that you have to disclose the accounting policy adopted for grant, including the method of balance sheet preparation. And then number 2 is that you have to disclose the nature and extent of grants recognized in the financial statement. So you may have received more than one grant or grant from more than one sources. You need to disclose the nature of the grant. Now, every grant comes with its own characteristics. Some come with its own requirements or obligations for the business to undertake. Now, no matter what, you must disclose in the notes to the financial statement. You write down there for all the users of financial statement to see the nature of the grant that you have recognized in the financial statement. Recognition has to do with incorporating the item onto the financial statement. So once you have recognized or you have incorporated the value of the grant into your financial statement, then in the notes you need to disclose the nature of the grant recognized up there. And not only the nature, but the extent of grant, the nature and extent of grants recognized in the financial statement. So the extent of the grants, the nature of the grant, every information that we need to know about the grant, you need to provide them down there as part of the notes to the financial statement. So like we say as students that the notes to the financial statement usually involves workings, but no, it is not just about workings. We need to also provide the notes on accounting policies and all the notes that are required by the various standard, which in this case IAS 20 is telling us that we need to disclose the nature and extent of the grant that has been recognized in the financial statement. And then we look at the last one under the disclosure of government grant. We need to also disclose unfulfilled conditions and contingencies attached to the recognized grant. Now please take note, when I was treating this topic from part 1, I made you understand that grants come with its own conditions and possible contingencies. Most of the time when a government or a government institution gives a grant to a particular organization, the grant is to serve for a purpose and there are conditions attached to the grant for them to fulfill. And I gave an example that if you have a manufacturing company in a rural setting where the youth lack jobs, okay, in that locality, the government may give a grant to the manufacturing organization, and one of the conditions will be that you must employ a particular percentage of the youth in that locality in your organization to help them also reduce unemployment in the country. So what we are trying to say is that every grant comes with its own conditions, and once there are conditions attached to the grant, don't just as an accountant record the value of the grant in the financial statement and expect us to be happy about it. You need to go further to disclose any conditions that are attached to the grant and any contingencies. Contingencies are expected financial situations that are ahead of you. For example, they can give you the grant and they will give you a profit target for the next 4 years. That if you are not able to achieve that particular profit target or a particular condition, you may need to refund a portion of the grant. So the possibility of a refund is a contingency, and you need to disclose that in your financial statement notes so that the users of the account, when they pick the account and the statement, they will be able to understand that, okay, even though there is a grant recognized for this amount of money, when the company is not able to achieve A, B, or C, they will be required to refund this percentage of the grant. So that becomes a contingency that you need to disclose in the financial statement. So let's look at the third point again. The financial statement needs to disclose any unfulfilled conditions and contingencies attached to the recognized grant. So these are the 3 disclosure requirements for government grant, accounting for government grants. Okay. Now, what we just looked at is the disclosure for government grant. But when it comes to government assistance, I have already told you from the previous parts of this lesson that government assistance does not include monetary value that is reasonably or reliably measured. So the only thing we do to government assistance is to disclose. So it is, look at the topic carefully, accounting for government grants and the disclosure of government assistance. So already government assistance, every government assistance needs to be disclosed down there. Remember that government grant in itself is an assistance, but those assistance which has monetary value and involves the transfer of funds, we call them grants. But those assistance that do not have those kind of monetary values, that are including the transfer of funds, then we don't call those ones grants. We just leave them as assistance. And the standard is so specific. That is why I keep warning that do not just write IAS 20 as government grant, but you need to be familiarized with the full name of the standard. When you familiarize yourself with the name of the standard, it will in itself teach you how to handle government assistance, because the name is accounting for government grants, one part, and the disclosure of government assistance. So we account for the grants, but we only disclose the assistance. So as far as there are no monetary values attached, okay, you need to just disclose them as assistance. Example is tax holidays, and then all those kind of assistance that can be given, or tax exemptions, tax rebates, all those are just assistance. The government do not really give you some cash to finance your operations. However, they ease up some conditions for you around you to help you operate better. And we call them assistance. And you must disclose, for example, that if the government has given you a tax holiday for a number of years, you need to disclose in your financial statement that from this period to that period, we are not paying income taxes because the government has given assistance. So all government assistance needs to be disclosed. And that is why the name is a disclosure of government assistance. And I'm sure this is very understandable for you now. And this is all that I want you to understand in this very video, the disclosure requirement of IAS 20. Remember to subscribe to this channel if it is your first time. Share this video and let others also have a benefit. And until we meet again for another video, it is bye for now. Thank you.